Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of New York and London coffee markets. Hello and welcome. Now before we start, I just want to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of the patterns, levels, analysis or any related items on these, my charts. This was all my own original work, as I think you deserve to have that. So with that, New York coffee. Okay, I said 9 weeks ago, and I quote, looking below, we have a congestion area at the moment around the short medium moving average between 309.90 to 312.85, containing the 50% Fibonacci line, the May 24 to February 25 move at 310.80. Below this, we have a large stratified series of supports starting at 290.85 and stretching down to 252.25. End of quote. Now, the reason I mentioned these back then at what are now levels some distance below is that, as I also said 9 weeks ago, and I quote, one new pattern has developed and two new patterns have started to develop. The easiest to see is the possible monthly key reversal we have on the cards for August, end of quote. Well, this pattern did develop into a monthly key reversal up for August, for which we have seen a follow-on high in September, and even now, with changeover and the gapping down, we have seen prices move higher but from a lower level, filling in the changeover gap. I carried on back then and I quote, the second possible pattern, and this is not as clear here as it is in London coffee futures, but we might have formed a June or possible late April to date descending scallop pattern. This looks like a backward letter J on my daily chart. We now need to watch out to see whether the market turns lower or heads higher. I suspect this pattern is coming to a climax, and I would then be able to give some idea of the move either higher or lower. This pattern has become more real in recent weeks with the peak of the upswing lettered J. End of quote. This descending scallop pattern became a triple stroke quad bottom, and a subsequent move up from the descending scallop pattern became an ascending scallop pattern from late June, July until mid-September. Not only that, but we might very well look at the whole June to date action as a possible cup with handle pattern, and even, though I do not hold to this view right now, and even a large March to date reverse head and shoulders pattern, one that seemingly failed on the follow through to the upside. The failure on the upside also affected the descending scallop pattern, and I have retired both targets for this pattern. What we can easily see from the recent action is that yet again the high at 429.5 from February this year has capped the rise, as it did in early March and late April. So what can we now expect from this market? Well, the lows 4 weeks ago ended up being just ahead of the key 50% Fibonacci line for the important November 24 to February 25 move at 335.15. And back then it had the pierced but unbroken assistance of the mauve medium moving average, currently 337.40, as well as the rising green short medium moving average, currently 359.60. Today we are well over both, and we seem to have built a small base since late September on the very slowly rising gold long moving average, which is currently at 355.10. After pushing up through it 4 weeks ago, when it was back then acting as a cap. We are now exploring higher, though seemingly with great care. All this action higher has left us with a number of interesting situations. Thus, I drew 2 weeks ago a dark blue beginning of August to late September bullish Andrews pitchfork. The market pierced the lower time for this pattern, which is currently at 392.5, but has not fully moved away from it, so I've kept it on my daily chart. It was, as I said 2 weeks ago, and I quote, I have some doubts about this pattern, as it's quite an acute bullish angle and would have no issues in finessing it to a shallower bullish shift pitchfork at perhaps some future day, end of quote. That future day is now, and I have done something I do not normally like doing. I've drawn a bright red bullish shift pitchfork with the same move as the bullish Andrews pitchfork at the same time on the same chart. We're at this time in between the bright red lower time below, which is currently at 364.25, and the bright red upper tie and above, which is currently 413.05. I suspect I'll likely retire the dark blue bullish Andrews pitchfork by next time. Now, there is something else I'd like to look at here, and for this I'm indebted to Ray Bradbury for asking me about New York coffee 29 weeks ago, and I went at the time to my longer term charts, and those are the monthly charts where we can see some possible insights. You see, on the monthly charts, monthly longer term charts, I noticed back then a pattern that had not been immediately obvious to me at the start of 2025, when I earlier reviewed the longer term charts. It is a multi-year 2012 to 2024 very large reverse head and shoulders bottom. The bright red neckline on my chart is currently at 276.25. The break higher over this neckline reached its primary target on the upside, but there was a secondary, harder to reach, much harder to reach target up at 433.35 area. What was interesting about this secondary target was that was nearby to that higher level was the next 100% projected Fibonacci line at 433.75, which is quite close in the scheme of things. Prices did indeed turn lower up at the key combination of the 100% projected Fibonacci line and the target of 433.35, dropping down through and closing below the important 50% projected Fibonacci line at 347.20 and below the high of May 2011 at 308.90. However, in July and again in August, the market started to form a base on top of the bright red neckline, with its monthly key reversal up in August, raced all the way upwards, and we saw an extension to that move up in early September, but not reaching quite as high, and we saw back in February, not reaching quite as high as the high we saw back in February, before dropping lower and setting up September as a monthly bearish harami. However, since then, we have not carried on lower, at least not yet in October, as prices have started to move back up and right now look like a monthly bullish engulfing pattern, or should I say an immediate countering bullish engulfing pattern. The top side had resistance between 371.25 to 375.75 since engulfed, and possibly further resistance again at the old broken upper time, which is currently at 391.5, and that's been the peak for October thereabouts just now, and that's of the former 2019 to 2023 bullish Andrews pitchfork. Now, I personally don't favour this resistance much, though we have stopped there for now. Meanwhile, on the downside, the real key will be the bright red neckline. However, the old 50% projected Fibonacci line at 347.20 still looks interesting. I should point out one more final feature on this longer term chart: the possibility that we may form a very large bullish halfway hesitation or a possible double top, with all the implications both these patterns may have. I will not discuss this last point any further, as it is way too early to isolate which will be which. But in all this, I ask you, please remember that these are here on this monthly chart, longer term, in some cases very long term patterns. London coffee. 24 weeks ago, I said of the bearish pressure on this market, and I quote, "They now have the overhang of the market from roughly 5,300 up to the year's high at 58.49 sitting above," end of quote. This overhang of bearish pressure and ammunition is important, as it started back then to press lower, heightening the impactful force of the break below an older shallow large bull channel, reaching both the primary and secondary targets below. The rise since early August pushed up through some significant resistances, now turned into supports. And more so, these are some keen, relatively close to the market supports, notably the trio of interesting 50% Fibonacci lines, with the November 21 to February 25 move at 38.08, the May 21 to February 25 move at 36.49, and the March 20 to February 25 move at 34.81. Then there's the congestion of the 61.8% Fibonacci lines at 41.68, 41.87, and 42.90. All these are now back to being supports, as is the flatlining pierced but still valuable mauve medium moving average, currently 40.25. Above the market, we now have some former supports that are now once again resistances, notably at the 50% Fibonacci line for the February 25 to date move at 45.05. That had been tested throughout October and has not given a fulsome answer yet as to whether it is broken or just breached. Further up, we have the gradually dipping gold long moving average, currently 46.81, which eroded a lot of the bullish incentive back in September and late August, and not too far away the lesser Fibonacci line of 48.22. I suspect the most important of all these is just above the market, and is the capping dark blue February to date downtrend, currently at 47.47, which made a lower second high in mid-September when compared to the late August high. Together they started to form a double top, but seem to have given up now in favour of another action. Thus we wait to see what the impact of the 50% Fibonacci line at 45.05 and the declining gold long moving average and even a dark blue downtrend may bring. As a final note, I have drawn a bullish Andrews pitch hook for the July to late September action. It is unhighlighted. Sorry, it's not even an Andrews, it's a bullish shift pitch hook for the late July to late September action. It is unhighlighted with prices right now just above the lower time, which is currently at 43.58. I am not in love with this pattern, and I hope that it might I hope it might start showing the way for a while at least, but I would have no qualms in retiring it completely should the idea of a double top really materialize. Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.